every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning and happy American Independence Day. This is Peter Lewis welcoming you to my podcast Money Talk for Thursday the 4th of July. I'll have the latest business and finance news for you in just a moment. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, UK voters go to the polls later today in what could be a landmark election in British politics. Polls consistently show the centre-left Labour Party with around a 20-point advantage over the Conservatives. According to a Sky News poll tracker, Labour is projected to win approximately 40% of the vote, while the Tories are expected to receive roughly 20%. China's services sector grew less than expected last month, according to a private business survey published on Wednesday. The Caixin Services PMI stood at 51.2 in June, down from 54 in May, and below economists' forecasts. The Caixin Services PMI has indicated expansion every month since the country ended its zero COVID policy in January 2023. However, June's reading was the lowest since last October. Hong Kong home transactions plummeted more than 30% in June, according to the latest official figures. Transactions of residential units fell 30.5% month on month, with sales value shrinking by 35%, according to data released by the Land Registry on Wednesday. The drop follows a 35% decline in residential transactions in May compared with April. And the slump in transactions is feeding through to prices, with recent new unit launches selling poorly and prices of lived-in flats slumping to a nearly 8-year low. That's according to property consultant JLL. Secondary home prices fell 1.2% in May, reversing a 0.5% improvement in April, and the May index reading is comparable to that of November 2016, JLL said. India's benchmark stock index hit a record high on Wednesday, buoyed by a jump in the share price of the country's largest private bank. The Nifty 50 added 0.7% to close at an all-time high, driven upwards by a 4.5% rise in HDFC Bank, the index's largest constituent. Elsewhere in Asia, Japan's Nikkei 225 and the Taiwan Stock Exchange weighted index are both close to reaching new all-time highs. On today's programme, I'm joined by Andrew Freris, the CEO of Ecognosis Advisory, and Hong Kong-based macro strategist Patrick Bennett. Later in the show, I'll be speaking with Kening Hua, founder of Voices Education. And please take a look at my daily Asian newsletter, which you'll find at peterlewismoneytalk.substack.com. You can also post any questions or comments there.
Peter Lewis's Money Talk.
In a holiday-shortened session Wednesday, 2 of the 3 major US stock indices closed at record highs as investors shrugged off sluggish economic data. ADP data showed lower private payroll growth than expected in June, while weekly jobless claims numbers came in higher than economists' forecasts. And a reading of service sector activity released later in the morning was considerably weaker than expected and indicated a contraction, according to the Institute for Supply Management. And there's one big set of economic data left for investors later in the week. That's Friday's non-farm payrolls. The S&P 500 index added 0.5%, closing at 5,537. The Nasdaq Composite rose 0.9%, ending the session at 18,188, as mega-cap technology names rallied, and both indices touched fresh all-time highs in the session and closed at records. The Dow lost 24 points, or 0.1%, to end at 39,308. Trading volume was muted Wednesday, with the New York Stock Exchange closing early at 1 p.m. Eastern Time, and US markets will be shut today for Independence Day. The yield on the benchmark 10-year US Treasury note fell 8 basis points Wednesday, settling at 4.35% following the ISM services sector data. However, the yield is still up from 4.29% last Thursday before the Joe Biden-Donald Trump debate. The US dollar index fell 0.33% to 105.34 on Wednesday. That's the lowest in 3 weeks. And Asian currencies slid against the US dollar on Wednesday. Japan's yen shed 0.1% to 161.63 yen per dollar, sinking further to its lowest levels since 1986. China's offshore currency fell to 7.31 renminbi per dollar, hovering near an 8-month low after the country's central bank continued weakening the renminbi dollar daily fixing rates. Gold was 1.1% higher at $2,355 an ounce. Brent crude oil climbed 1% to a 2-month high of $87.08 a barrel. And over the past 24 hours, Bitcoin has fallen almost 4% to $59,470. Hong Kong stocks led gains on Chinese bourses as mainland tech and property companies listed in the city rallied. The Hang Seng Index jumped 209 points, or 1.2%, to close at 17,979, and the Hang Seng Mainland Properties Index soared 3.1%. On the mainland, the Shanghai Composite fell 0.5% to 2,982, following a weaker than forecast China Caixin Services PMI. And futures markets pointing to a gain in the Hang Seng of about 90 points at the open. The index is projected to start trading at about 18,070. And you can get more details on the latest market movements in my daily newsletter, which you'll find at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
As we creep our way towards the end of the week, let's welcome our Thursday morning guests. We have with us, as always on a Thursday morning, Andrew Freris, the CEO of Ecognosis Advisory. Morning, Andrew.
Good morning, Peter.
And also with us is Patrick Bennett, Hong Kong-based macro strategist. Thank you for joining me this morning, Patrick.
Thanks, Peter. Good morning.
UK voters go to the polls later today. It could be a landmark election in British politics. In the 6 weeks since Prime Minister Rishi Sunak said he was calling a surprise election and dissolving Parliament, the colossal gap in the opinion polls between Labour and the Conservatives has barely budged. Voter polls consistently show the centre-left Labour Party with around a 20-point advantage over the Conservatives, according to a Sky News poll tracker. Labour is projected to win approximately 40% of the vote, while the Tories are expected to receive roughly 20%. And Conservatives from the top down are braced for defeat, and a potentially catastrophic one at that. On Wednesday, Work and Pensions Secretary and Cabinet Minister Mel Stride told the BBC he accepts that polls are pointing to a massive Labour majority, the largest this country has ever seen. So, Andrew, how significant is this election going to be? We've got a number coming up now, but what's the impact of this one likely to be on the market?
Well, funnily enough, I've been staring at sterling for several days now, and it has been going up. It points out possibly that the markets are thinking that Labour might not be the best solution, might not be a solution at all as far as they're concerned, but it's a better solution than the possibility of yet another Conservative government. It's very easy, of course, to take candy from a baby right now, but what I want to watch very carefully is how Farage is going to do versus the Conservatives, because I always have a distant hope that Sturmer one of those days is going to do the decent thing and start the process of UK rejoining Brexit. But that's a very long process, because he will hit a wall of opposition, and he'd rather not do this right now. He'd rather get elected, and rather than saying, if I get elected, the first thing I'm going to do is take us back into the EU. And he will be insane to do this. But I suspect at some stage in the next 10 years, this is going to happen. And as long as Labour has got power, then we will not have the awkward situation of putting back into Conservatives the most miserable things that a Conservative government ever did. And that was the plebiscite back, I've forgotten now, year 16.
2016, yeah, it was. Well, interestingly, look, if you want the UK to consider rejoining the EU, the best thing that could happen today is for the Conservatives to be completely wiped out and not even be the opposition party anymore. If the Liberal Democrats get more seats, they become the official opposition party, and they are the party that maybe might put more pressure on Labour to reconsider its relationship with the EU.
Yeah, I hope it's not, and I'll finish very quickly. This is not a matter of sentimentality that UK should be a part of the Europe. It is every single study that I have seen since the Brexit, it has it has produced evidence that it was a bad thing, full stop. I mean, in every single possible way. And my own experience in the last 3 years that I've been living a lot in the UK, it has been dismal. Okay, it has been such a bad thing to do. But anyway, finish. Enough.
Well, let's bring Patrick in. I mean, Patrick, whoever wins, they've got some big problems, haven't they, in the UK? Because the UK economy is in not very good situation. Productivity has collapsed since the financial crisis, almost to zero. The economy's stagnated. Whoever wins has got a number of issues to face up to.
Yeah, absolutely. Whoever wins does, and I think that's similar in some other other areas or other economies as well. I think the issue here or the approach here of markets, markets tend to like change, change for change's sake. But in this case, it's change for the sake of something better. I agree with what Andrew's saying about the Brexit situation. It's very difficult, or it's nigh on impossible to head into government on the back of a very aggressive or a very shocking type decision, but to get in and then say that we're looking to reverse some of the bad decisions that previously, I think will be somewhat more palatable. I think if we look at what's happening globally, there's a lot of focus on government debt. In that respect, the UK doesn't sit quite as badly as elsewhere. Certainly not in the same spot as the US. So that may be something which can garner some at least a honeymoon period for markets, and I think that will be the case if it is indeed a landslide, a very clear vote against what has been happening in the last few years. Then I think markets are likely to react positively to that.
I mean, the UK markets haven't really done an awful lot, have they, during this campaign? Sterling's been pretty sort of stable, which is it's normally the currency that reacts first, isn't it, to political shocks, but hasn't been an awful lot of movement so far.
No, there hasn't been a great deal. It has performed reasonably well on some cross rates. The dollar has been again strong for I think 3 to 4 weeks. It doesn't look to be doesn't continue that this week. But it has sort of held ground. It hasn't been damaged by the speculation of a change in government. But yes, it does seem to be a somewhat of a holding pattern to see what the extent of this change is going to be.
If the polls are wrong, and maybe, I think it's almost inconceivable that the Labour Party is not going to win, but if it doesn't get the landslide that the polls are predicting, or maybe it gets an even larger majority than the polls are predicting, could markets react then?
Yeah, look, I think so. If the landslide against the party is not as great as the incumbent rather as being expected, then I think we could see some initial weakness, because people are saying, well, why are we just going back to what we've had? And people are not happy. People are not content with what has transpired.
Andrew, the UK election's been rather overshadowed, hasn't it, really, by what's going on in France? The election there definitely has moved markets.
But also it is hilarious, because what was more or less instantly missed. It's not that I've got such a sharp argument that I pointed out in the French election that nobody has seen this. Was, of course, it was Le Pen winning, the majority, and then of course she was going to form a government. She was going to form a government with the extreme left. The extreme left would rather drink a large bowl of unpleasant soup rather than actually say that they will join with Le Pen. So we have the strange circumstances now that the fact that the extreme right has made a significant gain is going to be a more or less a godsend opportunity for them and Macron to keep Le Pen out of parliament. In other words, it is much easier for the extreme left to swallow Macron rather than the extreme left swallowing Le Pen and therefore keeping Macron outside. I sat there giggling and thinking, my God, you wake up in the morning and you find the most unbelievable bedfellows in your bed. And you don't particularly want
if you're lucky.
If you're lucky, yes.
But the polls are predicting a hung parliament in France. What does this mean for France? And also, what does it mean for the EU? Because obviously France is a pivotal member of the EU. This has implications European-wide, doesn't it?
Well, I'm going to step into dangerous territory because I clearly remember at least two administrations in France, whether they will have the cohabitation, the cohabitation, namely the president and the prime minister belong to different parties. And this is most likely to happen. And the understanding here is that Macron will look after the army and foreign policy, and whoever is the prime minister will look after finance and immigration. Okay, and domestic policies. So it isn't something that the French political system hasn't experienced before. If I remember well, Mitterrand, that seemed to be in the presidency forever. Incidentally, French presidents can be re-elected repeatedly, and Mitterrand, I think, was for something like 21 years president. I might be wrong, but definitely he had a cohabitation. In other words, he had to leave as president with a prime minister that wasn't in the same party. I might be wrong here. Okay, I'm giving you a misguided political tour of France.
But the maybe the difference this time is there's never been a cohabitation with an extreme right party before, and maybe even never a cohabitation with a president and a prime minister that are so poles apart politically.
Well, there you go. This is totally Mickey Mouse politics, because I would imagine it's much easier to bring a middle to right-wing party with a right-wing party rather than bring a left-wing party with a right-wing party. So it is uncomfortable. Okay, I call it, I'm really stepping out on dangerous territory, but I was sort of thinking that this is a kind of a political Kama Sutra where you assume almost impossible positions.
Again, if you're lucky.
Sorry, Peter, this is a family program.
Yeah, we need to move on to Patrick. We're on dangerous ground here. Patrick, I mean, markets have moved a lot, haven't they, in reaction to this election? We saw initially French equities give up all their gains for the year. We've seen the bond spreads between French 10-year and German 10-year bonds widen to the highest since the Euro debt crisis. We've seen the euro move, and then we've seen it sort of unwind a little bit on hopes that maybe Le Pen isn't going to get an absolute majority. But presumably here there is plenty of room for some market reaction.
Yes, I believe so. I mean, what really is happening, or what really risks to happen, is that this weakens further the entire euro construct. Again, markets sometimes will react positively to change, but if we have a situation of ultimately less clarity, then I think that headwinds to the euro, or ongoing headwinds to the euro construct, I think remain, and so in this case, the uncertainty and the unknown plays negatively.
And if we do get a shock, and Le Pen wins an absolute majority, and therefore they, in effect, nominate the Prime Minister, become the governing party. What does that mean for the euro, for the ECB? Does the ECB have to intervene to sort of support French bonds, buy them up? How does it work?
Well, yes, I don't think so that they would step into that. I think initially the euro may react positively, as it did a week or so ago, or less than a week ago, rather. Again, I think the market, if it gets clarity, of a larger victory, of a lack of uncertainty or an absence of uncertainty, then I think the euro initially would react positively. Whether it can sustain those as the threats or the uncertainty to the euro environment, I think is another question. But I would imagine, would expect initially positive. But that should be to run into caution very quickly.
Okay, well, look, let's move away from elections because we've got quite a lot of economic data out to look at. Andrew, the Caixin Services PMI, I know you love talking about PMIs. It stood at 51.2 in June, down from 54 in May, below what economists were forecasting. It is the lowest reading now since last October. I know we've got to be careful what we read into these PMIs, but what are you taking away from this? Because they've been a bit mixed, haven't they? Both the official numbers and the Caixin numbers, and actually rather contradictory.
Peter, I have to be very, very careful here, okay? But this is not going against your views, but going through what you have presented on what the numbers are, these are not at all the numbers. I have in front of me a bloody expensive Bloomberg. I can give you all the PMI numbers. They're completely different from what it is supposed to be. I'm sorry. Okay, this happens all the time. It has happened to me every single time that I read in a newspaper or in a newsletter what the PMI is, and when I come back to my Bloomberg, the PMI is not at all what it is meant to be. So, given that in mind, I'm going to do something incredibly simple. I'm going to look at the composite PMI, okay, of the CFLP, which is the official one, and that the unofficial one, that was the private one, the market one, again, which is the sum total. It is the composite, not just manufacturing. And I hate to say this, all right, but the PMI, the official one, okay, has actually been coming down, has been worse. Okay, and I can give you the numbers, but this is irrelevant. 50.8, 50.4, 49.5, 49.5. Okay, down, 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 down. That's the official composite. The Gaixin market, okay, that's the unofficial PMI, has been all over the place. And effectively, the decimal points were ludicrous. The big number was the 52, okay, 52, 52, 52, with going up and down, then went up to 54. Wow, that looks impressive, and then down to 52 again. So if I was to look in the last 4 or 5 months, and I was asked to say, what does the PMI shows as far as China is concerned? The answer is not good news. Not bad news, but definitely not expansion. And we have had the discussion before. And again, however pedantic it is, the PMI has nothing to do with output increase. It is simply an expression of opinion. That's all. And actually, the expression of opinion, it is even more stupidly simple. Are the things next month better or worse? Not better by 10% or 28% or 0%, better or worse? Better. Or the same, or less, less. You take those up, and if it is more than 50% a number, then you're getting that the majority of the people thinks that things are going to get better. All right, that's all there is. So it is long-winded and a little bit argumentative, and I'm not at all.
No problem.
It is true all the time. I'm really, really fed up because I pay a lot of money to have Bloomberg in front of me, and when I read the newspaper and they just don't match, I give up, really.
Patrick, as you can see, Andrew loves PMIs.
Look, I share frustration with PMI because the market loves them. The market would sell their soul for these PMI numbers, but I believe, and I believe I'm agreeing with Andrew here that I think that they are mistaken. I think they're I think the reading of them is not clear. These are a diffusion index, as Andrew was saying. They ask the survey participants, how do you feel about A, B, C, D versus last month? So if last month you had zero growth, and this month you had 20% growth, then you're going to be feeling your PMI might be 60. But it doesn't mean that you're growing. It doesn't mean that the economy is expanding. It means that the survey participants feel better this month than they felt last month. I'm trying to get to the bottom of them as well. I think the interesting thing about them is to follow the employment situation. Not just for these Chinese ones, but for everywhere else. Do people, do companies feel better about employment or worse? Prices, are they feeling higher prices or less prices? I think sometimes the headline number can be a little not confusing, but misinterpreted. So some further work to do on these. I think overall in the Chinese economy, the spread or the difference, the dichotomy, if we want to call that, between the official reading and the Caixin reading, suggests that all is not well.
I suppose if you want to get an insight into what's really going on in China, it's the property market we've got to look at, isn't it? The hard data for that. Now, interestingly, there, although it's still in decline, it appears that the rate of decline is slowing. So, can we take some positive news from that maybe, although perhaps we're not yet at the bottom, we may be getting close to it for the property market on the mainland?
Well, I think that's probably another fairly Panglossian view, I think. Yes, we're still declining, but not declining at the same rate. But I don't see a recovery anytime soon. I think on this show we've talked about previously, I've talked about a workout of at least 18 months and 18 months to 2 years. And I think we're only, 6 or 9 months at best into that. So even though we may be slowing, I think the outlook still remains very, very troubled. We don't have to look at the property counters here in Hong Kong to see that there's always, or not always, there tends to be some bottom picking when we get numbers that are not quite as bad as they were previously. But I believe the dominance in the market is still to the downside and still to be to selling into any rally.
Now, Andrew, let me switch to the US because we've had quite a bit of data out today. We had the ADP private payrolls report. That showed job growth less than expected. We also had the unemployment numbers. That was higher than expected. And then we had a pretty disastrous ISM services report, which showed the services sector contracting at the fastest pace in 4 years. I mean, maybe the thing to try and put this all together is the Atlanta Fed's GDP Now tracker of incoming data. They're now talking about annualized growth of just 1.5% for the second quarter. That's down from 1.7% on July the 1st and down from 4.2% earlier on in the quarter. It seems, however you look at it, the data is pointing now to the US economy slowing. But how are you seeing it, Andrew?
Well, bluntly, I'm only really interested on how the Fed is going to see it. And the Fed, it looks to me, by simply picking up the number of times that the word labor market appears in Powell's commentary, okay, they're much, much more concerned with the CPI and in specifically the oh, God almighty, I keep missing me, the CPE number rather than the labor. So yes, if the economy is slowing, then that will be a good thing, but only if it is reflected on inflation. Because if it isn't reflected on inflation, then Powell may very well say, "What's the point? I want this to be reflected on inflation, not on GDP." And if the tracker is anything to worry about, because remember this is on a monthly basis. The first quarter we've had 1.3. If the tracker comes out at 1.5, okay, for roughly the second quarter, then well, that's a slight improvement, but that's not the way it should be read. Okay, that will be a very wrong way of reading it. So my answer to that is yes, labor is important macroeconomically, but I don't think it is important macroeconomically as long as it is not reflected on inflation, because that's what this is about.
Patrick, what are your thoughts on the data? We had quite a lot of it today, didn't we? Certainly economic weakness, but as Andrew says, maybe the key is how is the Fed going to react to this?
Look, absolutely. If we were told that stocks would be at all-time highs and credit spreads narrow, and the Fed's hiked by 5.25 in the last couple of years, then it would have been very hard. No one would have believed that. Clearly growth is slowing, and it's slowing under the impact of higher rates. But I would say, are rates high enough yet to soak up this excess liquidity, which is clearly driving financial markets, which is clearly still driving speculative financial instruments. So I still believe that the market's fascination with the Fed being ready to cut rates is overcooked. And I think that, and I'm still have sincere doubts that we're going to be cutting rates, anytime soon. Cutting them just ahead of the election. I find that a very difficult decision, given that, as I say, financial markets, or given this excess liquidity around financial markets, is still driving them all to further highs. I mean, what would we say if we cut rates? Then we should drive equities to even higher levels. forecast. I mean, that seems a bit of a nonsense given what we're seeing in growth.
So that's interesting, because you're at odds here with the markets, because the narrative seems to be changing now about the Fed, that maybe people starting to question, is the Fed waiting too long to cut rates, given the slowing economic data? But you're saying no, it's too early to cut rates.
Well, I think it's too early to cut rates because inflation, I believe, is still too pervasive. I mean, we heard Jay Powell talk the other day. We're in a deflationary environment. Oh goodness gracious! The market seized upon that. Oh, we're in deflation now. No, we're in a deflation environment. Prices are not rising at the same pace as they were before. But I think it's far too early to think that we're going to get an aggressive. Well, not an aggressive, even a sustained period of rate cuts from here. As we know, markets don't like forecasting the status quo. They always want to forecast, a change from where we are now. And my expectation is that we remain on hold for a longer period than is expected. So,
Andrew, if we look at the FOMC minutes, which were also released overnight, there does seem to be a growing sort of split on the FOMC. Some are in Patrick's camp that it's still too early to cut rates, that inflation isn't coming down. But there are others who are now saying that the Fed risks waiting too long and causing a bigger downturn than necessary. Where do you stand?
Well, I've taken for a long time now an educated coward's position, and that is, I tell my clients, forget about the Fed, and you simply, when the Fed finally cuts, then you buy equities. So, frankly, I really don't add any value to anybody on almost biblical interpretations of what the Fed may or may not do. Okay. Right now, we expect them to cut interest rates at some stage. We have no idea when this will be done. Neither do they. It is no good looking at numbers, because numbers must be looked in the way in which the Fed will interpret them, not in the way that I would interpret them. And that's also a pointless exercise. In other words, forecasting the forecast of the forecasted numbers of the Fed. I mean, it's not a game for grown-ups. That's why, as I said, I've made it very, very clear. Don't do anything on the basis of what you expect the Fed to do, because nobody knows, neither does the Fed. Right now, the good position is stay with nearly 5% yield on 2 and 10 years. Let's say 4.5 years. Good, excellent return. If the Fed cuts interest rates, you're going to make capital gains. And in all probability, equities are going to benefit. Fantastic. So why bellyache? This is, as I said, this is the educated coward's way out.
So, Andrew, your message is you don't want to forecast what the markets are forecasting, the Fed might be forecasting.
Precisely, exactly. I know that you know that I know. Oh, come on, please. Life is too short. All right.
Patrick, let me get a final few thoughts from you on the markets, because you mentioned that earlier. I mean, if we look at the first half of the year, everything's up. US stocks are up, crude oil is up, cryptocurrencies are up, bond yields are up, the dollar is up. It's almost sort of defying all the economic realities at the moment, isn't it?
Yeah, interest rates are up. Yeah, as well. If you tried to put these, if you were told these things at the start of the year, then I think you would find it very hard to make the case of where markets, sit right now. My belief is that there remains excess liquidity. That risk assets are going to continue to do well, that the new economy stocks continue to do well. And this is, despite any, belief that they're overcooked at these levels. As Andrew rightly says, when the Fed cuts, equities go up even higher. So it doesn't matter, it doesn't seem to matter to equities where interest rates are. So I think, blind faith is never a good thing. But buying weakness in these in the new economy stock for now still feels the way to go. Standing against what's happening in property in China, still my favourite position as well.
Well, thank you both very much for a very interesting and entertaining discussion this morning. You heard there Hong Kong-based macro strategist Patrick Bennett and Andrew Freris, who is the CEO of Ecognosis Advisory.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
I'm joined now by Kening Hua, who is the founder of Voices Education. Good morning, Henning.
Good morning, Peter. How are you?
I'm very well, thank you. Tell me a little bit, first of all, about Voices Education. What is it?
So we are a educational consulting group. And unlike a lot of the elite consulting groups who's more based in trying to get students into the Ivy Leagues, I think we're more focused on having wellness education along the years of preparing for our students. So I think there's a lot of mental health crisis. I think there's a lot of stress. There's a lot more tests going on. And I think the bar has been set much, much higher in the last 10, 20 years than it was for when I was applying for college myself. APs has increased, SAT scores have increased, A-level classes has increased. I think the expectations for what a student needs to do to be a good candidate has multiplied and multiplied and multiplied with how many qualified candidates there are out there. So our job is to help students navigate the 3-4 years of their high school, trying to find what they really are looking for. And most of all, we're trying to be the bridge in between, communicating between the expectation of the student via the parents. I think a lot of our parents, especially us who grew up kind of Asian, we have a lot of expectations of how we should be, where we should be, the fact that we should have perfect scores. And I think competition, realistically speaking, when every other parent expects their kid to have the perfect score, is quite frankly very tough.
And your background...
So our job is to,
And your background is as a sort of, you've been an entrepreneur. You're part of the female entrepreneurs worldwide. Tell me a little bit about that.
So I started working when I was 16. I started my first job at KFC just because I wanted to be able to pick my own kind of clothing instead of what my mother wanted me to wear. But from there on, I realized that, making money or having money is more about having the freedom to choose what you want to do with yourself. It is about who you wanted to hang out with, when you wanted to go out, except where you have a ship coming, right? But on the free time that you're not committed to a boss, you get to do kind of what you wanted to do. And I think from there, I realized that if I could be my own boss, then I can be on my own schedule as well. So I think that's how I started working for myself. For most of my entrepreneurship has been still revolved around students. I started as a teacher, a tutor. I taught Chinese, I taught English, I taught EMT at one point because a lot of my friends in the US were looking for a good alternative job. And I think my high school was privileged enough to offer EMT training, which is something very unique that most high schools didn't offer. And I really enjoyed all of the extracurricular activities that came with working for myself.
And tied in with that, of course, is being financially independent. So why is that important, particularly for women, to be financially independent?
I think it gives us, or I think everyone, first of all, a choice. And I think choices in this world is very important. I think it doesn't matter if you're a mother, a wife, even a father, right, or a student at this point. I think being able to choose how you want to live is very, very important. For me, I wanted to be a goth in high school. Not that that was a brilliant choice, but it was a choice because I was able to work for myself. I was able to buy my dog collar without my mother's approval, or that would have been an endless debate and fight that I was never going to win. So, I gave up and I said, 6 hours at KFC at $7.25 an hour. I'm good with that. I'd rather do that than the argument I wasn't winning. I think as a mother, for me, it's very important for me to be able to, afford help. I work for myself. I like the flexibility and the freedom of bringing my child to work with me. I am very, very privileged in the sense that, because I do a lot of teaching at home, I can have my baby in the next room. My child is 10 months old. When we started the interview and she came in, that was her going, wah, right? So she gets to play in the playpen. I'm able to afford an IE who's able to help me out around the house. I'm able to juggle the role of a mother as well as, someone who's working full time. So I think all of those things really help you not having to make the really, really difficult choices that I didn't really want to make. Be it stay at home, be it work for myself, be it be with my baby or not be with my baby. I think by having the financial capabilities to be able to support you when you need to have the extra help when you need it, to, just to buy that ticket coming home and not have to wait for the train, for example, being to take that cab instead of being on a bus. All of those things really help when I'm talking about my under 1-year-old child going out in public, especially during flu season. It really worries me when I have to be on a bus and I'm just like, you know what, 30 RMB for a cab maybe is the difference between whether or not my child gets to stay with me like today or not, or if she's staying home by herself.
So what are the sort of the challenges or obstacles that women face when trying to become financially independent? I mean, you've talked about one, which is, childcare and being able to, to work and also bring up children at the same time. But what sort of other challenges do you face that maybe men don't face?
I think the physicality of having the child, first of all, is definitely something that we get to go through that most men has yet to be able to do for us. I would have loved for someone like my husband, if we could negotiate for him to carry the child instead, but that's obviously not happening. So I think physically, that is something we have to do. And I think because of that, there's a lot more consideration that we're doing. And I think at the workplace, one of the things that I try to encourage my female employees is to take things slower and to give themselves the breathing room to make mistakes. I think in life, with our students, with our employees, with our friends, with our colleagues, we are able to afford them a lot of room to grow, right? And in that growth is the ability to make mistakes. And I've noticed that, when we go for an interview, the HR doesn't tend to ask men, hey, what kind of father do you want to be? Like, how many kids are you guys going to have? Like, what kind of wife do you foresee yourself, having, 3-5 years down the line? But I think those questions get asked either in the break room, either very forward at the HR, when do you plan on having kids? How many kids do you plan on having, right? Like, what kind of husband are you looking for, right? Do you want to have a husband? And I think those questions, in essence, is forcing someone who's starting out to work, forcing a woman to make a choice very early on because we're being told in the back of our minds, hey, we need to think about parenting. We need to think about our partners. We need to think about, what's going to come down the line. And I think one of the things that I had the privilege of doing was just not listening to my parents and just making all the mistakes that I wanted to make. I personally didn't get married or even meet my husband until like 35, 36. I didn't have my first kid until I was 37, 38. I think for most cultures, be it anywhere, right? I think I'm on the later end of that scale. And I think it's because I spent my 20s doing everything other than thinking about how I wanted to plan out my life. And it was one of the best decisions that I think I made personally for myself, which is to not plan out my life 10, 20 years down the line. But I think for many women and many of my students these days, starting out, they're very scared that, their path is going to be imperfect, or the road that they're going down is not going to be as timely as they want it to be, or they're going to miss, the great time markers, or, the big clock is ticking. And these are the landmark decisions or the landmark things that you need to do. You need to be proposed to by then. You need to be married by then. You need to do all of these. And that really puts a constraint for a woman, a student, even a guy, right? A man, normal men, working men, to say, what can you do? Because if you're telling someone you need to be married at 27 and have your first kid by 28, then you're basically saying by the time you get out of college, you really have 4 years for yourself and that's it. So if I give all my male employees, all of my students the benefit of the doubt, they'll figure it out. By not asking a question of who do you want to be, what kind of mother you want to be, what kind of wife you want to be, or what kind of husband you want to be, what kind of father you want to be, then I do the same for all the women that I employ as well. And I think that helps balance out the stress and the overthinking that you kind of start the moment college ends. It's like the moment college ends, we're told, got to figure out your life or else you're going to be behind.
So when you compare being an entrepreneur, becoming financially independent in Hong Kong as a woman, is it different from maybe the USA and Europe and Western sort of cultures?
I think it's going to depend on how well adjusted your family is. I think in the US, what I've seen from a lot of my friends in college, I actually went to a women's college in the US. I grew up with a lot of, African Americans. I grew up with Hispanic friends. I grew up with a lot of Asian friends. I grew up with a lot of Asian American friends, as well as friends in Shanghai and Hong Kong. And I had one particular friend that I remember who was Korean, but grew up in New Zealand. And I have realized it's more about how their family perspective has shifted or where their family core values are, and less about the country that they're growing up in. I think, for example, New Zealand is very different than, the LA downtown culture, which is very different than, being in like Yangpu, Shanghai, where I grew up, versus, like Hong Kong, which is very, very dynamic and fast paced. I think at the end of the day is still how your parents, how your grandparents, how the immediate family and the circle of friends that you grew up with, the subculture and the context of that subculture that really defines the values that you hold. And I think for me, for a lot of my friends, when we were at Mount Holyoke, it was about accepting the fact that our subculture is the way it is, right? Our parents have their values, our grandparents have their values, but it's okay for us to choose our own values and to mix that in with the new community that we're trying to put ourselves into, that we're trying to insert ourselves into.
And what can you do?
So it's more about how well you blend.
And what can you do to now use the experience that you've been through, help other women become entrepreneurs, become financially independent? What sort of resources can you do to sort of support and help other women in their communities?
I think the first thing that I would always say is to just believe in yourself and to slow down. I think for most of the women that I've worked with in the past, I try to tell them that they have a lot of time on their hands, and that, for everyone who has 24 hours and 7 days a week, they're different. We don't need to be perfect. We don't have to do things in a rush. So I think by, attaching yourself to a mentor, to a big sister, reaching out to community groups, reaching out to alumni networks, I think a lot of people are open to the idea of mentorship and to, helping any person starting out in their career to find their own path. I think for us who went to a very liberal arts college, who has a very small community, we're very eager when, our classmates reach out and say, hey, I have advice to ask for. And I think one of the best things I've done for myself is to utilize that, that college network that I grew up with, the graduate school network that I have, even the high school and the middle school network. Recently, one of my friends went to a 30-year reunion for his kindergarten class, of all things. And you realize that people are still, I think we carry this like very idyllic vision of what our childhood was like. And when our childhood friends reach out to us, either for advice, for all of these things, we're happy to reach out, we're happy to connect. And I think if we're unafraid to ask for help, if we're unafraid to network, if we're unafraid to reach out to these people, be it your 30-year-old, your friends from 30 years ago in kindergarten, be it your high school network, be it your friends from college, be it your graduate professors, by opening your mouth and simply stating what you actually need. I think there's a lot more people out there who's willing to help you than you think there is. Okay. And I think part of it is you being scared to ask and being afraid that they're going to say no. But I think if the worst answer is no, and you already told yourself they're going to say no, then I think it can only go up from there, right?
Okay. Well, Kening, thank you very much indeed for talking to me this morning. That's Kening Hua, who is founder of Voices Education.
You're listening to Peter Lewis's Money Talk. Money Talk.
Thank you for listening to Money Talk this morning. Do please take a look at my newsletter at peterlewismoneytalk.substack.com for more information on developments during the Asian trading day. I'll be back tomorrow with the final Money Talk of the week, when I'll be joined by Francis Lund, the CEO of GEO Securities, and Frederick Chu, an independent ETF consultant, and providing our regular weekly updates from the UK on the British general election is Richard Harris, Chief Executive Officer at Port Shelter Investment Management. Please catch me tomorrow.
Money Talk